You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
You are listening to MSE. I'm Bill Powers, your host. Thanks for tuning in. In today's show, you're going to get our quarterly check-in from Dr. Rob Stevens of MiningStockEducation.com. He has his book, Mineral Exploration and Mining Essentials. It's the #1 book I recommend for newer mining investors when you're wanting to get a grasp of what an explorer is versus a developer versus a pre-production and the whole mining life cycle and the basics of geology. You should pick up that book. It's about $100 or so. But if you're going to deploy any amount of money in this sector, that's the one you want to have. It has great visuals as well. There's other great books out there too that don't have quite the level of visuals that Dr. Rob gives you in that book. So welcome back onto the show. Dr. Rob, you're going to talk to us today about critical minerals, and I'll hand it over to you.
Yeah, great. Thanks, Bill, and thanks for the comments about the book. Always been a passion of mine, and really enjoy teaching and developing that. So hope your readers do have a chance to pick it up. So yeah, today I thought we would talk about critical minerals. There is a lot of talk about critical minerals out there in the mining world these days. So I thought I would step through that a little bit and talk about what they are and maybe what some of those opportunities are and some of the things that your listeners could think about with regard to critical minerals. So I'm going to first just give an overview of what critical minerals are, current market trends. We'll look at some data and see where things are at. And then some investment considerations for people to think about. So starting off with what are critical minerals or metals? And I mean, this is maybe a little bit of a technical thing, but I would want to clarify that the term critical minerals is what's broadly used, but in reality, they are mostly metals. When we look at them, lithium, cobalt, copper, those are actually chemical elements and they're metals. So critical minerals is a bit of a misnomer. I would probably prefer to call them critical metals, but there we are. But maybe just a point of clarity there. So there's several criteria that define what people are referring to as criticality. And maybe the first really would be critical minerals. They're important or critical to modern society. And that's probably the overriding definition of them. But there's some key points. Demand and supply risks. So that's partly what defines a critical mineral. Are there supply limitations due to lack of production or concentrated production or processing in only certain countries? Some of these critical elements may be byproducts or minor elements that are not commonly found as the primary product in many deposits. So there's some limitations to them that way. Processing capacity. This is probably one that sort of moved critical minerals forward more than anything else, as it can be highly concentrated in a few countries, and in particular concerns around concentrations in China. And we need increases in exploration and production in some of these metals because people haven't really been paying a lot of attention to them until just recently. Another part of it is the uses and applications, and probably the primary one there is it's for uses in the transition to a low-carbon economy. That is really, I think, what's kind of moved critical minerals to the forefront is this transition from hydrocarbon-powered energy to electrical energy, and a variety of different sources of energy needs a lot of different metals and minerals. So batteries, electric transmission, and a variety of technologies. Critical minerals also varies according to location, i.e. the country, and at any given time. So for example, if significant production started to develop over the years, what is critical now may not be so critical, if we have the supply coming on. And it does vary by location because a lot of this is about trading routes, supply chains. I think one thing that really came out of the pandemic was concerns about secure supply chains. And so that's part of it. Where is it being produced? And what are the networks of partner countries and agreements where those metals may be able to move to? So it varies from one country to the next. couple of other terms that people will hear: strategic minerals. Generally, that's a term that tends to have a military connotation. And then battery minerals. It's those metals really that are needed for energy storage, things like lithium, cobalt, nickel, and graphite. So there's a bunch of aspects to this critical minerals story, but these are some of the key ones that define it. Just as a couple of examples, this is Canada's critical mineral and metal list. There's actually 31 metals on this list, but some are more, quote, critical than others. And, we sometimes laugh a little bit as this list contains just about everything except for gold. So it's cast pretty wide, but what I've highlighted here in yellow are some of those elements that are of more concern currently, particularly in that transition to a low-carbon economy. This is another one from the Visual Capitalist from last fall, and it highlights the critical minerals lists in the EU, in China, and the US. And each country comes up with their own list according to their industrial requirements, military needs, and strategic evaluations of supply risks. But when you look in the middle here of the bunch of them, of all three countries, again, you see things like copper, nickel, rare earths, lithium, graphite, cobalt. So those ones on a global basis are really of need. I was interested to see here that gold is considered a critical mineral in China. Maybe there's not enough production of that because it isn't on Canada's list or I think on many other countries' lists. So it does vary by country to country depending on their own internal needs. Okay, so taking a look at some metal price trends here, and I'm just chose 4 of these kind of primary metals, battery metals really, and these are 5-year charts. And I guess what I would say, if we look at nickel, lithium, and cobalt, all 3 of them have a fairly similar chart, particularly lithium and cobalt, in that they ran up in early 2022, and they have subsequently taken a significant drop down to where we are now in January 2024. So that's a trend to really keep your eye on. It's not uncommon for commodities and metals for sure that when they run up, they tend to run back down. And maybe I think that run up in metal prices was maybe getting a little bit ahead of itself. But always when you have commodities that become a hot topic, this is an issue you got to watch out for when they rush up, and of course try to avoid getting in at the top, wherever that top may be. Copper here at the bottom right chart is holding up a little bit stronger. It had a similar rush up and a pull down, but it is holding a little bit stronger, and I do think that copper, of the bunch of them, will remain a strong commodity going forward. I wanted to just highlight the IEA.org. It's the International Energy Agency. They were actually an early group that put out some good reports on critical minerals and what's needed for transition to a low-carbon economy. Here's their critical minerals review from 2023. I would encourage your readers who are interested in this topic and really want to dig a bit deeper, take a look at this publication on their website. They have the data available for free if one wants to really dig deep. And a few of the charts that I'm going to show here come from this publication. So it's a good source of information. With that being said, this first bit of data here comes from S&P Global Market Intelligence. But we are seeing some, so these are mineral exploration expenditures from 2010 to 2023 on a global basis. And what we are seeing is some increase in exploration on these critical minerals. So I want to just highlight the one in green here, battery metals. And if we look at 2023, we look at that green color here near the top of the bar, and you look towards the earlier years, you can see there has been now a fairly steady increase in exploration for those metals. Uranium, I think, as well, although uranium's come and gone a little bit. So we are seeing it, but, A little bit, not a ton, but a little bit is starting to increase. I think that's going to be a trend in the coming years, as there will be more and more expenditures, exploration expenditures on these commodities. So just some specifics: lithium was up 20% in 2023, increases in copper, nickel, and uranium. And, without a lot of new money coming in, something's going to have to go. And what we have seen is some decrease in gold. Gold is such a huge amount of about 50% plus or minus of exploration is towards gold. So it's not surprising it would be the one to take a bit of a decrease. So this comes from the IEA. This is increasing capital expenditures. If we take a look here, let's say lithium specialists in particular, just focusing on the green one at the top, we can see now some increasing capital expenditures towards lithium. I would also say towards cobalt, copper, and nickel. So responses are happening. The reason I focus on capital, of course, because that's the development expenditures now to put these into production and start providing some supply. Venture capital investments. This is one that shows a significant increase. And I want to note here that all I have is Q1 2023, not the whole year. So don't take that as it suddenly went down in 2023. We're just looking at the first quarter. But as you can see, these are battery, venture capital investments. So not just in mining, battery use, recycling, but a lot of extraction and refining as well. And we are seeing some big increases in money going into that sector. So supply-demand scenarios, I think this is one that's really driving the critical mineral story, is a real increase in demand for things like electric vehicles, for solar power, for wind power, etc., without the associated supply to meet that demand. But if I look at some of these and just, I know there's a lot of bars on this chart here. So we've got 4 different elements here: copper, lithium, nickel, and cobalt. The left bar is the 2022 production. So that's kind of, let's say, where we are right now. Then we've got anticipated supply at 2030. Then we've got the APS, which is the announced pledges scenario. And then finally, the last one is the net zero emissions by 2050. So maybe if I just start with that one, the net zero emissions by 2050. If you look at that scenario, we are short on supply and everything. I think the only caveat I would say is that, are we going to get to net zero by 2050? I think it's going to take longer than that. I think that's an aspirational target, and we should continue to move towards that. But I don't think that's going to be a realistic target. So I don't think lack of supply to meet that target is a real scenario, and we're going to need to follow this. 2050 is a ways off, so we're going to have to see where we get. What I'm interested in is this anticipated supply and what's needed for the pledges. So the 2 middle bars here. So we're a little short on copper, a little short on lithium, a little short on nickel, and may have already enough cobalt. So I just say that to say that, yes, we are short on supply, but, the mining industry is full of entrepreneurs. And when an opportunity presents itself, individuals and companies get in there to fill those gaps. And I think that that's going to be an increasing story. I think if we look at a similar chart next year and over the years, we're going to see that supply-demand scenario tighten. I particularly think that's going to be the case with lithium. So one of the real challenges with critical minerals that comes up is the issue of concentration in production and processing. This goes back to supply chains, making sure North America, for example, or Europe is able to get the minerals that it needs. So on the left here is the concentration of mining, so the actual production. And I'll just point a couple out. Graphite here, with China having the bulk of the production, likewise in rare earths. Lithium with Australia and Chile being the 2 main, the dominant players there. Cobalt in the Democratic Republic of Congo, and nickel with Indonesia and the Philippines. So there's some real concentration in some of those key elements. And this is part of it, to widen that out and to have production occurring in many more countries. Processing, even more so. And really the dominant player here is China. And so they have the processing control of a lot of these elements, which means they can control the market and the supply. And, that can be a real issue for jurisdictions such as North America. And I wanted to mention uranium. This is a real energy transition play. This is a chart here from about 2 days ago. And it's a 25-year chart, and I wanted to do 25 years rather than a smaller time frame so that everybody could see this rush up here that happened in 2007 and 2008. And it looks surprisingly similar to what's starting to happen right now with this big rush up happening in uranium. I'm a big believer in uranium, but a lot of people don't like it. There's a lot of concern about it. I think it's going to have to be a key player in the low carbon transition. And I understand there are supply crunches even right now because of lack of exploration for it. But I'm always cautious about things that run up really quickly. Mostly what goes up tends to come down, that's for sure. All right, so what are some investment considerations in the critical mineral world? What are some of the things that you really should be sort of thinking through? So critical minerals are generating significant and I would say broad-based interest. I've heard some data, for example, that Canadians generally are feeling much more positive about mining than they were a number of years ago because of them seeing the importance of these metals and minerals to, the things that we use all the time. I'm hoping that that's going to increase the investor base in mining, which would be good. Means, broader investment, more liquidity, that kind of thing. It's been a bit of a challenge in the industry. We'll see, but hopefully that's the case. There are many different metals and minerals to invest in. So critical minerals is not just one play, it's a lot of individual ones. There are great new opportunities, but I think emerging and developing markets, some of which can be very small, so we're not talking about a lot of tons of product, can be difficult to assess. So for example, price transparency. That's improving for some of these metals, going to be traded in a more transparent market, but it is a little bit of a challenge right now. I would say, just as a caution, despite the hype, supply may well meet demand for some of the most talked about critical minerals, such as lithium. To me, lithium, geologically, there are a lot of different lithium deposits. We know where a lot of lithium is. I think if you took out a global resource right now, we would have a lot of lithium. Now, can you all put that into production? That's obviously a different story. But I do feel that there's quite a bit there. There are obviously going to be opportunities in lithium, but it is also a case where only some deposits are really going to work out. Uranium is on a tear, but caution when prices go up so quickly. And I think copper is going to remain strong. Demand is high. Geological resources are well known. And by that, I mean, I don't think there's not going to be a lot of hidden giants in there. There's been so much work for exploration for copper. Yes, there will be some new giant discoveries, but I think mostly we're going to be building on what we know and developing deposits that need a higher price, to go into production. That's not the case with some of the other metals, which have not had the same level of exploration. So there could be some giants out there that are hidden that we just don't know about right now. The other thing with copper is it's got limited substitution with other metals and quite a bit of diverse usage. So I'm certainly feel copper is a good one. I thought this was one I started thinking about, and I was reading PricewaterhouseCoopers put out a publication, Mine 2023. There of reinvention, so it's kind of a review of mining. They put one out every year, and they had some data and some quotes in there that I really liked. And so here's a quote I think is an important consideration for critical minerals. So the quote is, "One shift that demands a response is the emergence of an important new player in the critical minerals market, government. After seeing rapid demand growth and risky levels of supply chain concentration, governments have formed alliances, instituted new policies, and mobilized funding to secure access to critical minerals." So that's a whole nother player now that is not quite free market sort of player, but which is really playing in the market and can have a big influence on that. So an inflow of public funds, and we're seeing that in Canada and in other jurisdictions. So that changes some economic scenarios. If you're able to get public funds to help support your development, for example, that could make that development economic where it would not be potentially otherwise, or not as economic. Increased competition. Governments and some industries are really wanting certain commodities, and they're willing to pay for it. And it's developing new supply chain routes so that countries like Canada and the US can have secure supply with their partner countries. And there's incentives, tax incentives, financial incentives, but there's also interventions where countries are restricting where products produced in the country can go to, or what kind of product, where products can be imported into the country, depending on where they're produced. So that may take some deposits, depending on where they're located, could put some restrictions on them from a free market perspective. So just a couple of examples that I wanted to mention. So in Canada, in terms of the incentives to explore and develop national projects, Canada has what's called a critical minerals exploration tax credit. That is a real bonus. You have to be a Canadian taxpayer to benefit by it, but that is really increasing exploration for critical minerals in Canada. There are also new incentives and tax breaks that have been put in place to provide funding to help to develop and build new critical mines. There's also restrictions on export and investment in Canadian-based critical minerals companies. So, if you're looking for global investment, certainly from some countries, and you're based in Canada, you may not be able to get that investment if your project is based in Canada. So that's creating a negative, in a sense, on the ability for that deposit to be developed. On the other hand, if you have a deposit in Canada, there are government dollars that are going to help you to move that project forward. And in the U.S., the U.S. Inflation Reduction Act, and I'll just take another quote from the PricewaterhouseCoopers report, the IRA, as it's called, presents vast opportunities for big mining companies. Though miners can't physically move their mines to the U.S., they can make changes to their operating processes, investment plans, offtake arrangements, processing routes, and workforces to capitalize on it. So these are all new sort of angles that come in from a government point of view. So to get to the investment considerations, so look for and anticipate more direct deals with car and battery manufacturers and possibly governments in specific critical mineral assets. So I didn't maybe highlight that so much, but what you are seeing are car manufacturers, battery manufacturers, and others making direct deals with mining companies, investing in projects. Maybe even some of them may want to become miners, which probably isn't a great idea for them because that's not their strength. But I would look for those. If you hear companies talking about it, those could be opportunities. It's like the old scenario where a junior made a deal with a major and that moved their stock up and propelled them because they've got that big investment behind them. So something to really look at. Consider where projects are located, associated supply chain advantages, government incentives. Those can help change the economics of a project. I think when we think about the majors, so look for diversified miners, those that have one or more, that have or are moving into the critical mineral space, such as copper or lithium. I like the idea of a company that combines the enduring strength of gold with new opportunities in high demand commodities. So they're diversifying themselves a little bit more into those commodities that are needed. And for juniors, these aren't all specific to the critical mineral space, but some specific things to think about. So track commodity trends and consider those price trends. Just watch for the quick up and the quick down. Arguably we could be in not a bad position for some of those now because they have come down. But maybe the going up was never realistic, and where they are now is where they should be. So that, understanding future metal prices is never easy, but you should consider that in your investments. Location, and then as I say, location, that always applies. But I've sort of talked about the benefits of certain locations and possibly detriments to others. So really think where that deposit or projects are located. Follow updated supply-demand projections. If you're buying into any one of the metals, lithium or any of them, because of a feeling that we are so behind the supply that it can only go up, it's amazing how quickly the mining industry is able to move in and address those gaps. So just keep following that is what I would say. The IEA puts out regular data. So you're making an informed decision about what are the current projections for supply and demand. I said assess the cost curve for a project. I mean, that's easier said than done. Probably if you're following lithium, if you're heard stories of lithium miner in Australia cutting back, that's too costly, prices come down. So that concerns me with some of the hard rock lithium miners, is that those projects may be on the high end of the cost curve and may not be so viable, whereas the brine producers and those things that are lower on the cost curve will be more viable. So think about that a little bit. And then consider, what a project might bring to a government and downstream manufacturers. If there's if it's located in a country such as Canada, US, Australia, and others that are putting these investments and benefits in, that's an upside. And is there something within that project that downstream manufacturers are going to be interested in? Because those kind of deals can bring money in to move the project forward, and so there's an opportunity there. So there we are, Bill. There's my overview of how I see critical minerals at the moment, and some of the opportunities and things to think about. Just to wrap up again, my book is primarily available on Amazon, either amazon.com.ca or .au in Canada and Australia, and .com in the US and around the world. I also have some short courses available for those who want to dig a little bit deeper. And if you go to miningcourses.thinkific.com, I think if you just search mining essentials on the web, they'll pop up pretty quickly. And there are some short courses that you can take there if you want to learn a little bit more about the mining life cycle. So yeah, there we are, Bill.
Thank you, Dr. Rob. Quick question before you go. When it comes to focusing on a given commodity, I was advised by my broker, stay away from rare earths, because he said in all his decades of experience, the only people that made money on rare earths were the promoters, is what he told me. And he said that sector requires the greater fool theory, to where you better be buying before a promotion and sell to the people who buy because of the promotion. And then when you get into other markets like vanadium, I remember researching that before vanadium went on a run. But one of the frustrations, especially as a new resource investor, was, where do I even track the price?
Right.
So what are your thoughts on some of that, where you get into it's not gold, it's not copper, it's not uranium, it's not nickel, these huge markets, but these smaller, more niche metals? How should a retail investor approach that?
Yeah, I agree. You have to take some caution. You have to do more research on it, and there's a lot more uncertainties. I mean, the metal price transparency is a challenge. Now, some of them, lithium and I believe cobalt and others, are becoming, moving into public trading platforms. So there will be greater transparency to those prices. The other challenge with things like rare earths and vanadium that have relatively small markets, compared to nickel and copper, for example, you can get greater price fluctuations. And so even with transparency, we may see those ups and downs. And I think with rare earths, to me, those are unique deposits. There's not a lot of them. They have a lot of processing challenges to them. Getting the rock out is one thing, but then eventually processing that material to extract the rare earths requires specialized processes and deals with companies that can do that. So it is a more challenging market for sure. I mean, I think there can be some great opportunities in it, but it's much more difficult to assess in my mind than something like gold or copper. So I think you just have to spend your time on that. And obviously, I guess if you can buy in before the hype and get out at the hype, that's always a pretty good route to take for pretty much all the juniors if you can hit that spot, which of course is never so easy. So yeah, and maybe those are not commodities for some people to get into. They should, even if you want to get into the critical mineral space, stick with those the bigger ones that are becoming more transparent.
Excellent. Well, thank you for this education, and we'll touch base with you in about another 3 months or so.
All right, that sounds great, Bill. Thanks very much.